Hey, today we have Ryan Bartley, Senior Vice President and Market Officer at Link Logistics. Hey, Ryan, thanks for being here. Can you first tell me a bit about your work and about Link Logistics?
Sure thing, JD. Well, thanks for having me. This is exciting to be here. So
Cool.
I really appreciate it. And so I oversee Link's investments and operations here in the Minneapolis market. I'm a native to Minnesota, and I've been in commercial real estate for about 20 years now. So coming up on that. Currently, our Minneapolis portfolio is about 18 million square feet. We have 160 buildings and over 500 customers, and we are the largest owner of commercial real estate here in the Twin Cities. Nationally, Link is among the largest owners of real estate as well, with about 500 million square feet and 11,000 customers. To give you a little bit of perspective of Link's scale and size, about 5% or almost $1 trillion flows through Link's facilities each year.
Wow. And that's mostly in the industrial realm, right?
Correct. All industrial real estate.
All
Yep. So
industrial.
that's our focus.
So there was a big boom in industrial. Link moved into this market, basically became a household name in the industrial sector. Can you tell me a bit about what some of your strategies were at the time and what opportunities existed?
Of course. We identified two major things. First, Minneapolis has an economically strong and diverse tenant base with 17 Fortune 500 companies. And we also found there to be quite a bit of fractional ownership and private investors with larger portfolios, and believed it was a market we had an opportunity to achieve scale rather quickly. So from 2018 to present, we've acquired more than 20 million square feet. And we attribute a lot of that success to having a great local team of experts and the support of a major capital partner. This allows us to invest soundly, and we're very proud of the portfolio we've assembled.
Yeah. How would you say the Twin Cities industrial market has changed since that boom, and what opportunities do you think still exist?
Well, prior to the boom, I'd say Minneapolis rents remained relatively flat. And since the boom, user demand in Minneapolis has jumped dramatically, and we've seen strong increase in rent growth. The fundamentals of e-commerce have been a big driver of user demand, and we think that will continue. Additionally, transportation costs have seen an increase, and tenants are focused on being closer to their end user to reduce those costs. So we identified this trend early, created an infill portfolio that supports our customer needs. And we're very bullish on industrial real estate in the Twin Cities and believe tenant demand will continue to remain strong moving forward.
Yeah. What do you think has chilled some of that boom?
I think it hasn't really chilled. I mean, the capital markets certainly have been a disruptor, I'd tell you, but our demand has not stopped. So the user demand is still really strong.
Yeah. It's just harder to get investors signing on in kind of uncertain economic times.
I think, yeah, with the uncertainty of the capital markets, there's certainly going to be a, there's groups rethinking how they're looking at their real estate and their returns that
Yeah.
they achieve.
Yeah. And Link has made some divestments since the boom was really at its peak. Was that always the plan, or did something change and you decided to sell? What's happened there?
I'd say always the plan. I mean, Link will continue to be buyers and sellers of industrial real estate here in Minneapolis, and we're not one that looks to time the market. On the assets that we've sold, we achieved our targeted business plan. It was appropriate time to sell those assets. And I think it's as simple as that.
Yeah. Yeah. Can you share how much you guys sold?
Well, I think we've round tripped about 10% of our portfolio. We're really focused on further growth in Minneapolis and bullish of the long-term prospects of the market. And we'll continue to buy, sell, and execute on our strategy.
Yeah. What did you say? You round tripped it? I don't know what that means.
So bought it and sold it.
Sure. Okay. I guess I could have assumed as much. Is the future bright here? What do you think is the outlook for the Twin Cities industrial market? You've spoken to this a little bit already.
Yeah, I think we feel really confident the Minneapolis industrial market remains bright. Historically, we've been a market where development stays in line with user demand. We're seeing no signs of that dynamic shifting currently. I think vacancy remains very low, very healthy, and is among the lowest in the country. Minneapolis has demonstrated to be more resilient than other markets in the country. In fact, during the Great Recession or the financial crisis, excuse me, Minneapolis remained healthy and only saw about 60 bips of vacancy increase, where the market or the country saw more like 250. So it's a steady market. We have strong tenant base. We have great operators here, and it's a great economy.
Yeah. Um, how would you compare it to other markets? What are some of the strengths and weaknesses that Minneapolis has that others maybe don't?
I think, I mean, it's a strong performer. Our vacancy remains low. Supply remains in check with demand. We have a diverse and educated workforce and skilled labor. Our unemployment is low. We have a strong household income. I mean, these are all great things that make our market fundamentally sound. Certainly makes me proud to be here, living in Minnesota and working here.
Yeah, for sure. Um, do you think the focus on kind of proximity to population centers is as important as it was a few years ago, considering, more people are working from home? There's been maybe some flight to the suburbs. I don't know if that trend hasn't necessarily been proven entirely, but would you say that's as important?
I would absolutely. I think the increased transportation costs and labor scarcity really are a focus. So proximity to population will remain very important. I mean, there are always going to be certain submarkets that are going to perform better than others, but overall, the entire market here performs very well, and we have a very diverse population base.
Yeah. Um, Zooming in, what do you see in the various submarkets? Where do opportunities remain strong? How's the industrial sector changed in the various submarkets?
I mean, the Northwest submarket continues to be have the most tenant demand, leads the market in net absorption. So I think that one will continue to remain strong. And that is why we have a bulk of our portfolio concentrated around that Northwest submarket. We're starting to see quite a bit of development out in the East and the South, like Woodbury, Cottage Grove, Lakeville, cities like that.
Mhm.
And so we're keeping an eye on those. But market wide, we really have no concerns of oversupply and really feel good about all of our submarkets here in the Twin Cities.
Yeah. Um, have you guys been developing in that kind of east southeast area?
To date, we have not developed anything out there. There are quite a few larger and local developers that are doing that today, and we'll see how the success they have. And but there's certainly the activity has been strong at all these various developments.
Yeah. Are there any projects or recent acquisitions that are public at this point that you could point to that you're maybe excited about or think was really a kind of a gem of an opportunity?
I think the portfolio we've assembled here in Minneapolis is a gem and has been an opportunity. We've been fortunate enough to buy a couple larger portfolios, like a 2.5 million, a 5.5 million, and another 2.5. So we've done great with the acquisitions we have. We found to date. We are certainly always looking for more. We're always chasing others, and think we'll continue to buy here. But the market has slowed and from the acquisition disposition world, given the capital markets that we've seen. And so we're hopeful that that trend picks back up to the levels we saw in 2020, 21, and early 22.
Sure. And there's this huge backlog of demand, right? So once the markets kind of stabilize, do you expect that to happen? Do you expect things to pick up again?
I do. I think we're seeing it currently. The fundamentals of industrial real estate have not wavered. There's still very strong user demand. We're still getting great rent growth, and we're really seeing all of those fundamentals continue to just plow through what people are thinking could be a recession or any disruption in our market.
Yeah. What would you say is driving rent growth? Is it just this kind of imbalance of supply and demand that's really doing that?
I think that we have a really strong user base here of tenants that want to have an infill location, which is what Link had the portfolio we have. So we've been fortunate enough to be a part of that growth. And I do think that there's a lot more user demand in Minneapolis than we had seen prior to I guess the pandemic.
Yeah. Um, do you guys do work beyond the metro, or have you mostly stayed kind of around the Minneapolis-St. Paul area?
We're focused primarily in the Twin Cities as it relates to Minnesota. We like to stay in major markets. We want to be a group that has a presence. And so we have not found there to be a reason yet to focus on like a Mankato or Duluth. currently we're focused right here in the Twin Cities.
Sure, sure, that makes sense. All right. Well, Ryan, is there anything that you wanted to add that I didn't ask about?
No, I appreciate you having me. And yeah, we're really excited about where 23, 24 is going to go in the industrial real estate market. So keep an eye out. I think it's going
Yeah,
to be.
for sure. Sounds good. Thanks a lot for taking the time.
Thanks, JD.